Greetings everybody. Smart Money Atlas is in the house. Today we are going to talk about trends in the market and all there are about them you need to know. In general, every movement in chart is called trend. It does not matter if the movement is upward or downward. For example, we call upward trend or bullish trend when the chart looks like this. The reason for calling bullish trend is because an imaginary bull is trying to raise the price by its horn underneath the price. Likewise, when price is decreasing in chart we call it downward trend or bearish trend. Again, the reason behind naming it bearish is an imaginary bear is trying to push the price in chart down by its pawns. Therefore, every ascending or descending movement in chart is called a trend. Let's get serious and examine the matter professionally. That is certain that there is no horizontal move in any live market. And price is always in the road with highs and hills. For every trend movement in chart, like every livings, there is a rest and a correction period that is called retracement. Retracement is when there is a trend move. No matter bullish or bearish, price needs a resting stop. Usually, price after catching its breath continues to its trend. In this session of our price action course, we are going to talk about these movements and retracements of price that are called trends in charts. Let's see how these retracements are formed. Look at this example carefully. Assume some financial institutes and banks bought particular stock in price A. The price starts to rise to the point B. Remember, there are always sellers and buyers in every price in every market. And likewise there is no exception in this stock too. Therefore, there are plenty of sellers and buyers of this stock in every price levels. However, these institutes, like their entrance to position, have another particular price in mind to sell their stock and close their trading position. What happens next? Price after reaching to the point B starts to decrease and retracement happens. This retracement helps the market to gain energy for its next movement. Then new buyers that have been waiting to enter the market at lower prices start to buy in again, another bullish movement forms. This scenario happens again and again every day in market and builds market trends. In general, every diagonal move in chart is called a trend. It is better that these trends appear fully in your screen. Look at this example. This is not a trend and is called swing that we talked about it in another video. There is a clear trend in market in this chart. Let's talk about types of trend. There is a scale for measuring the every trend's power. The scale for this matter is distance between each retracement. Look at this diagram. In every trend, every upper point is called a high and is shown with letter H, and every lower point is called a low and is shown with letter L. Because this is bullish trend, by every move in chart, a higher high and a higher low as a pullback is formed. The space between each higher high and the next lower high is called gap. The more this gap is wider, the more powerful trend becomes. It is vice versa in bearish trend. Look at another example. Here the gap between lower low and the next higher low is our measure of trend's power. As a result, there are 4 types of trends, which is very powerful, powerful, mild, and finally weak. So as mentioned earlier, by appearing a gap, the trend becomes very powerful. This means momentum of trend does not allow any deep pullbacks. In a powerful trend, there is no gap between pullbacks. And price usually returns to a certain level before continuing to its trend. It is obvious that the more trend line becomes horizontal, the weaker trend becomes and forms a mild or weak trend. Where does recognizing the power of trend comes in handy, may you wonder? It helps in setups and strategies to determine whether to enter a position or not. It is common sense that only logical move in very powerful trends is in the direction of trend. This is a warning that you should not enter any powerful trend on the opposite direction or you may lose heavily. Nevertheless, in mild trends it is possible to enter in both sides. Finally, in weak trends we could buy at lower prices and sell in higher ones. This strategy is called BLSH. By understanding concept of trends in price action, you will be able to improve your strategies in trade. That is it for today's session of trends and trend lines. Tune in, as we will continue with concept of channels and patterns in our next video. If you enjoyed this session, you know what to do.